Bitcoin is selling off, and many traders are already saying a major crash is just around the corner. There is an old stock market saying, sell in May and go away. But when we study the current Bitcoin market structure, we actually see something very different developing. For us, this currently looks more like a shallow pullback inside an emerging uptrend rather than the start of a major collapse. And in this Bitcoin crypto trading technical analysis, we are going to explain the market structure and crypto trading signals that are leading us toward that view. Let's get into it. May produced an important breakout. Bitcoin successfully broke above the dominant February range that had controlled price action throughout February, March, and April. That breakout was significant because it suggested buyers were finally starting to reclaim lost ground after months of compression. However, even during that breakout, we knew Bitcoin still had several major hurdles ahead. The first major hurdle was the 2026 yearly midpoint. Since February 1st, Bitcoin had consistently traded beneath this 50% level, showing weakness in the broader yearly structure. But during early April, we started seeing a swing higher and eventually received a buy alert from our proprietary crypto trading indicator. That rally eventually culminated in the May 6th high at 82,791, pushing directly through the 2026 yearly midpoint. At first glance, breakout traders probably assumed Bitcoin was simply going to continue exploding higher from there. But here's the thing. We were already tracking two important conditions that warned a sell-off could develop. The first warning came from the parallel price channel that started from the February 6, 2026 structural low. We had already told our viewers before the May 6th top to pay close attention because every time Bitcoin had previously reached the upper boundary of this price channel, the market had sold off afterwards. You can clearly see those reactions circled on the chart. That told us the market was approaching an area where profit-taking and seller activity could begin increasing. The second warning was even more important. Bitcoin was running directly into a major Fibonacci resistance zone sitting between 82,357 and 83,322. So when you combine profit-taking after a strong rally, upper channel resistance, Fibonacci resistance, and a strong rally into overhead supply, it becomes much easier to understand why sellers eventually stepped in. In reality, some degree of pullback was always likely after such an aggressive rally higher. So what happens next? To answer that properly, we need to zoom out slightly and study the weekly picture. And interestingly, the weekly structure still technically remains inside a downtrend. However, something important may now be starting to change. The April-May rally, combined with the current pullback, is beginning to produce a change in character. In other words, the structure is starting to behave differently compared to previous rallies during the broader decline phase. That does not confirm a new bullish trend yet, but it does suggest the market may be preparing for a larger structural transition if buyers can defend the current support region. Right now, Bitcoin has slammed directly into a Fibonacci support zone between 74,448 and 74,595. This becomes a very important area on the chart. While many pundits are currently spreading the word of fear and weakness, we potentially see the early stages of a buying opportunity developing. But we do not buy blindly. We always need confirmation from price action first. And this is where disciplined crypto trading becomes extremely important. Because although Bitcoin is currently sitting inside support, support alone is never enough reason to enter a trade aggressively. Markets can always break lower. In fact, Bitcoin could still lose this Fibonacci support zone entirely. However, even if we see temporary weakness underneath the Fibonacci zone, we would still ideally want Bitcoin holding closes above the 2025 anchored VWAP, which currently sits around 73,250 and may provide additional structural support underneath price. So at the moment, we potentially have a buy setup developing, but importantly, it is not confirmed yet. For us to become buyers, we would want several conditions to appear. First, we want to see strong bullish candles reacting from the Fibonacci support zone. Second, we want a fresh buy alert from our proprietary crypto trading indicator. And thirdly, on a daily or lower time frame, such as the 4-hour chart, we want a proper swing structure begin forming through a higher low, followed by a higher high. That combination would give us significantly more confidence that buyers are regaining structural control of the market. Notice the word probability, not certainty. Crypto trading is always about probabilities and risk management, never guarantees. And if those conditions do appear, then our stop loss would sit behind the Fibonacci support zone, depending on the exact structure that develops. At the moment, though, those confirmations are not fully there yet. And if the Fibonacci support zone fails decisively, then we simply reassess the market again. But at the time of this recording, we still believe this may simply be a shallow pullback inside an emerging weekly uptrend. Now let's explore why that possibility matters. If this support zone can hold, price action begins turning higher again, and we receive a fresh blue buy alert, then Bitcoin could start challenging the May 6th top once more. And that May 6th high is absolutely pivotal to Bitcoin's larger market structure. Because if Bitcoin successfully breaks above that high, the market would officially begin producing higher lows and higher highs, which is the structural foundation of an uptrend. A breakout above the May 6th high could also trigger a much stronger rally because it would begin filling the price gap created during the aggressive January 28th decline, a decline that left very little structural support on the way down. And when markets fall aggressively without building structural support structures underneath price, they also often leave relatively little resistance overhead during recovery rallies. That potentially leaves Bitcoin open to challenge both the January 28th and January 14th highs. Importantly, the January 14th high also represents the 2026 yearly high. And another interesting factor is the 2025 anchored VWAP, which may eventually begin acting like a price magnet pulling Bitcoin back toward the psychological 100,000 level. We actually produced a previous video explaining why the 100K region matters psychologically and structurally to Bitcoin's price action. So these are the key levels traders should monitor closely. The Fibonacci support zone between 74,448 and 74,595, the May 6th high at 82,791, the Fibonacci resistance zone between 82,357 and 83,322, and the 2025 anchored VWAP near 73,250. Those levels will likely tell us a lot about Bitcoin's next major directional move. We hope this video has helped you. Before you go, join our free daily crypto trading newsletter. It's just a 5-minute read, and it will keep you ahead of what's moving in the crypto trading market. The link is above and in the description. If you found this analysis useful, subscribe to Crypto Trading Mastery and hit the notification bell so you don't miss our next daily video. Thanks for watching, and we'll see you in the next one.